Global markets will start the week nervously with a close eye on the Middle East and key US growth and inflation data later this week. Asian currencies are nervous near record lows. And the RBA will hope for lower inflation data in Australia on Wednesday. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ commodity strategist Soni Kumari explains why silver is now on a tear, catching up to gold. It's partly about supply.
Supply is lagging because supply is a bit inelastic in case of silver because silver is mined as byproduct of other metals.
But first, in 5 and 5 with ANZ, markets are on uneasy tenterhooks after the weekend's events in the Middle East. And ahead of key GDP and inflation data coming out of the United States later this week, the relatively limited actions by Israel against Iran helped calm some nerves that was seen in Friday trade, when the Nasdaq fell 2% and the S&P 500 fell 0.8%. ANZ Group Chief Economist Richard Yetzinger says the bond markets will be the ones to watch. He's reminded of a quote from James Carville, who worked for Bill Clinton.
That he wanted to be reincarnated as the bond market because he could intimidate everybody. We're just in a phase now where really the primary thing that matters to global market pricing is what the US bond market prices and how it deals with this kind of higher for longer issue. And the GDP numbers and the PCE numbers towards the end of the week are going to be pivotal to that question about can the Fed in fact ease at all this year. I mean, our view is it can, but obviously market pricing has continued to push that out.
Number 2, Asian currencies and central banks are also watching those bond yields and the US dollar's strength closely, after a range of currencies hit record lows last week. Here's Richard on just how much pressure is on those central banks in Asia.
It is pushing out expectations of rate cuts in Asia, and I think that makes sense. It's not that nobody can cut without the Fed. I mean, Korea, for instance, Thailand, for instance, where policy does tend to be a bit more domestically determined, where inflationary pressure is lower, where the pass-through from the exchange rate into domestic prices might not be as strong. Those two economies seem front of the queue that could still potentially cut without the Fed. But for the rest of the region, this dynamic just kind of puts pressure on them not to move, particularly when oil prices have been quite strong. You know, weak domestic currencies and high oil prices, you're adding that inflation dynamic back into the story.
Number 3, Japanese inflation data on Friday was a bit weaker than expected, dropping to 2.7% in March from 2.8%. ANZ FX analyst Felix Ryan says the data isn't likely to shift the Bank of Japan, or the BOJ, when it makes its decision this Friday.
If we look at the headline level of CPI in Japan is really more driven by goods than services at this stage. BOJ would prefer, I think, to see more domestic-driven services-led inflation. So really it doesn't suggest an aggressive tightening cycle is around the corner for the BOJ at this stage.
Number 4, one theme playing out in global markets right now is whether some central banks can disconnect from the Fed's rate cycle. The European Central Bank is seen as the one most likely to disconnect and to do it first. Here's ANZ Head of G3 Economics, Brian Martin.
The European inflation backdrop is materially softer than it is in the United States. We've seen a very sustained and substantial improvement in all measures of inflation in Europe, from goods to services, core and supercore. I think the ECB are just making it emphatically clear to financial markets that they can move independently of the Fed, that they will set policies so that it is appropriate for the 350 million citizens living in the euro area, and that they are not going to be constrained by the challenges that the FOMC are facing at the moment in their own inflation complex.
Number 5. The big number to watch out for in Australia this week is March quarter CPI inflation, where ANZ Research sees the quarterly number up to 0.8% from 0.6% in the December quarter. But the annual rate is likely to fall to 3.5% from 4.1%. Here's Richard on how the RBA might view that.
To what extent can we see this stabilisation in inflation, or where can we see the stabilisation in the previous disinflationary trend? Is inflation proving to be sticky? And particularly this kind of imbalance between tradable inflation, which has been soft, and domestic or services or non-tradable inflation, which has been more robust. And in fact, we expect to see those trends in the Australian numbers. The quarterly number is likely to be higher than we saw last time. But our view is the Reserve Bank of Australia won't start easing towards the end of the year.
Richard Yetzinger there. Now, in our bonus deep dive interview, ANZ commodity strategist Soni Kumari explains why silver is finally jumping on gold's fast-rising coattails.
The recent rally in silver is driven by impressive price rise in gold because fundamentals for silver were already strong last year, but it was not reflected in its price performance in 2023. And even till February this year, if you see, silver was still trading in the range of $22 to $23 per ounce. So just to give you, some perspective about relative performance of both metals, silver tends to outperform gold in rising gold price environment. However, this was not the case last year as silver price remained subdued against 13% increase in gold prices. And we can relate this to muted investment demand both in gold and silver, which is further linked to aggressive monetary tightening by central banks. As we know, higher interest rate is a headwind for gold and silver investment because it just increases the opportunity cost for holding these metals. So in case of gold, it benefited from intensifying geopolitical tensions, decent fiscal demand, and strong central bank purchases, while silver prices saw a kind of disconnect from its underlying fundamentals. So now when gold prices are rising above market expectations, silver remains a cheap alternative for investors. And I think the institutional investors have been noticing silver in recent months. There is an undersupplied market backdrop along with higher gold prices. I think these two factors are going to spur investors' interest in silver.
What's driving the undersupply of silver, and what is silver mainly used for?
Yeah, so strong industrial demand and constrained supply growth are keeping silver market undersupplied, and it's likely to continue next year as well. So industrial demand for silver is diverse, but primarily it's used for electronics, and now demand from energy transition is rising as well because silver is used in solar sector. It's also used in power grid construction, automotive electrification, and this all new energy sector is supporting silver demand. So we are also seeing an upturn in the electronic cycle, which will support demand for silver. And the estimate for semiconductor sales, which is also proxy for electronic cycle, it's projected to grow by 13% year on year this year. And this is going to see a similar rise in silver demand for 2024. Further, there is increasing solar installation this year, and the demand for silver is likely to increase by 8% to 211 million ounce. So apart from this industrial demand, we also expect a demand recovery in bar and coins and jewelry due to higher gold prices. And given this strong demand growth, I think supply is lagging because supply is a bit inelastic in case of silver because silver is mined as byproduct of other metals. And we have seen the growth for silver is remaining in the range of 1 to 2%. So on balance, we are seeing the undersupplied backdrop will pave the way for further inventories withdrawal, and that should support prices again.
So what's your outlook then for the silver price for the rest of 2024?
Well, as I said, silver takes direction from gold price move. So we see structural drivers like lower interest rates and weaker dollar for gold prices are yet to materialize. And we still hold our long-term bullish view for both gold and silver. And we expect silver to outperform gold with prices rising towards 31 per ounce for silver, and for gold, it's 2,500 by the year end.
Soni Kumari there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, April the 22nd. Catch you tomorrow with a deep dive interview with Richard Yetzinger on housing supply in Australia. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.